Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, January 9th, 2020, and we are again in the final hour of the trading day. I mention this each day, but in my opinion, the most valid prices to make your buying and selling decisions from are the prices that are as close as you can get them to the close of the market. And I say this because during the day, you have the algorithms, you have the day traders. They're fighting it out. They're battling it out. I considered a lot of noise, and I don't think it's a good idea to make buying and selling decisions just based upon intraday noise. At the end of the day, you have the large financial institutions, you have the market makers taking over control of the price from the algorithms and the day traders and moving it to what, in my opinion, is the most valid price of the day. And that is why I am primarily an end of day trader and make my buying and selling decisions at the end of the day. So, well, we're having a great day. The Dow Jones is up 201 points. It's up about 0.7%. NASDAQ is up 68 points, up about 0.75%. And the S&P is up 19 and change, up about 0.6%. So, it's an unbelievable bull market. It just keeps going and going and going, which is great, right? Which is great. So anyway, I hope everyone's doing well today. Thank you so much for coming. I appreciate you being here. I appreciate you investing your time with me. I hope it is helping with your trading and in investing. You're getting some kind of return on investment, excuse me, from spending your time here. So all right, let's take a look. I just want to make sure everyone can hear me. So if you could hear me, maybe say hi in the chat. Just want to make sure everything's coming through on the audio. All right, so let's take a look here. Hey, Christopher, how you doing? Thanks for saying hi. Hey, listen, Christopher, I have something that might be of interest to you. You know how the other day you were asking about V1s, V2s in TrendSpider, whether there was an indicator? So I had someone reach out to me, Christopher, mentioning you, saying, hey, Christopher was asking if there was some kind of indicator, so forth and so on, that could be programmed for TrendSpider, and he was nice enough to reach out, and you can see here, he has done a kind of a custom script for TrendSpider that allows the charting software to denote where the V1s and V2s happen. Here's a different chart. You can see here it shows where the entries, and so forth and so on. But he does have the code here. He has the back test. It also does the back test. So anyway, I asked him, I said, would it be okay if I gave Christopher your email address? And he said, yes, that would be fine. So Christopher, if you are interested, send me a message on Twitter or on my email, and I will get you in touch with this person that was nice enough to do this. And so he said it would be fine. So anyway, yeah, he went in there and programmed it. I do want to keep in mind, or I want everyone to keep in mind with V1s, V2s, just because you have a V1 or V2 does not automatically give you an edge, right? V1s and V2s are important, but they're important. It's important that you take them in the context of the chart, of the larger chart patterns, right? You can't just take any V1, V2. They're great, but they have to be in the right context. So anyway, Christopher, if that's of interest to you, feel free to send me a message on Twitter or on my email, and I'll get you guys in contact with each other. Sound all right? But thanks for coming. Hey, Steve. Hey, buddy. Good to see you. Appreciate you being here as always. It's always an honor, always a privilege. I'm always excited to have you here. I know everyone else is. Steve says, what a day on my Beyond Meat and Etsy positions. Wow. I know Steve is having a monster day. I actually emailed him a little while ago and congratulate him on that. So Beyond Meat's up huge, Etsy's up big. So we'll go over that when we go through the charts. But congratulations, Steve. Happy for you, bud. Grant says, hi, Greg and all. Hi, Grant. Good to see you. Nice to see you. JT, hey, Greg, got out of McDonald's at 207, bought it at 195. Yeah, you know what? I noticed earlier McDonald's was just cranking. So you know, this is a good example, everybody. I like buying in consolidation. Consolidation, and this is right where JT bought, right down in this area. This consolidation, remember, consolidation goes sideways, 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 and then it usually moves pretty big one way or the other. Unfortunately, we don't know which way, right? And we don't know when it's going to happen, but it's pretty certain that it is going to happen. And this is a perfect example of buying here in consolidation and then having a big move. And JT got out at 207. Fantastic. Love to see it, JT. Congratulations, my friend. Hey, Dave, what's going on? Good to see you. Thank you so much for coming from Denver. In Styles 420, how you doing? Good to see you. Thank you so much for coming by. I think this is the first time. I haven't noticed that name before. So thank you so much for coming. If there's anything I can help you with, please let me know. Hi, Pat. Good to see you, sir. Appreciate you coming. Dr. Jorgensen, hey buddy, good night's sleep last night due to the SPY. Yes, we had a nice overnight SPY trade, so we'll talk about that in a second. Hey Kurt, what's going on, my friend? Hey Greg and all, couldn't make the live class lately, but caught you later that day. Also, I wouldn't mind that TrendSpider info as well. Okay. Well, I have Kurt's email, so I will send you that, Kurt. All right, and then you can get in contact, and you guys can talk about the code and so forth. But he said it was fairly simple. So anyway, that's nice. I'm glad we're doing something like that for TrendSpider. Clarence, what's going on? Nice to see you, Jesse. Jesse says, "Hey, Greg and gang." Hey, Jesse. Hey, Clarence Beeks. Okay, so listen, the plan for today, first of all, we're going to run the U.S. legal disclaimer, get that out of the way. Secondly, we're going to come back, we're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and most importantly, how I'm going to manage them moving forward, either to the upside or the downside. After that, some of you have been kind enough to share some of your current trades, and so we're going to go through those, take a look at those. And after that, we're going to go... after that, we're going to spend a few minutes on trader psychology. I like to have a little part of the program every day that talks about trader psychology. In my opinion, it is the most important skill that you can develop. It's important to develop your technical skills and be able to analyze support, resistance, risk to reward, all that kind of stuff. Yes, that's important, but the more important skill after you learn that is to be able to follow your plan, and that has to do with the motions. And I'm sure everyone can relate. Everyone, I've had a plan and there have been times in the past where I've had a great plan, didn't follow it. Why didn't I follow it? Because my emotions got involved. So I like to talk about that. I think it's very helpful. So hopefully you'll find it helpful as well. After that, we're going to go down through all my stock positions and my watch list one by one. We're going to look at support, resistance. We're going to look at indicators like MACD, RSI, moving averages, RSI. My opinion, my basic opinion on trading is I look at all these indicators as potential groups of buyers. If I can get a confluence or a combination of indicators lining up, then I look at it as a combination of different groups of buyers coming in. And if you want to put yourself in a position, the best position to have a profitable trade, you need to be with as many groups of buyers as possible. So just logically then, if I can find a confluence or a combination of indicators, in other words, a confluence or combination of different groups of buyers coming in all at the same time, all at the same time frame, all at the same price, then I'm going to put myself in the best position to have a profitable trade. So requirement number one, look for a confluence or a combination of indicators or groups of buyers, another way to say it, right? Step two, I need to make sure I have a good risk to reward ratio. Sometimes I can have a good confluence of signals coming together or indicators coming together, but depending where it happens in the channel or at the RSI level, I may not be able to take it. I want to make sure that if I'm risking $100, I have a good likelihood to be able to make $200 based upon the resistance above me and also based upon the support below me. So Step number 2, look for a good risk to reward ratio, minimum 2-to-1. Step number 3, just make sure you don't have too many correlated positions. You don't want 5 tech stocks, right? If it goes up, yeah, you do really well, but if it goes down, you get hammered. So I like to have diversification, maybe some healthcare, maybe some technology, maybe some autos, maybe some tobacco, right? Make sure you have some diversification in your holdings. You don't have all your eggs in one industry basket. And it's also a good idea to go outside of equities with other different securities, maybe like gold and oil and bonds, silver, something like that. So those are the 3 steps. 1, look for a confluence or a combination of indicators lining up. Step 2, make sure you have a good risk to reward ratio based upon the resistance above you and support below you. Step 3, make sure you do not have too many correlated positions. So I'll go through the watch list. If something looks good, I'll go ahead and take it at the end of the day. When the market closes, if you have any other questions or comments, need clarification on anything, please let me know. I'm happy to clarify it. If you'd like me to take a look at any stock symbols and break it down, I'm happy to do that as well. And then if you see a symbol today that you think would be helpful for the group that may be setting up and having a good setup, and you'd like me to break it down before the market closes, please go ahead and just type in a star by it or exclamation point or something like that, so I know it's time sensitive, so I can hopefully try to get to it before the market closes. So, all right, well, that is the plan for today. If you could just hang on for about 40 seconds, I'm going to run that U.S. legal disclaimer, and I will be back in about 40 seconds. Thanks a lot. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, let's see. Make sure microphone's on. Microphone's on. Greg, you sound like you don't have an anxious bone in your body. What do you attribute your calmness and serenity to? That's funny, Grant, because I am actually a pretty high-strung, anxious person. Isn't that interesting? I would say that one of the reasons you may think I have all this calmness and serenity is that when it comes to trading, I know exactly what I'm going to do. And I've spent so many years putting together if-then statements, because normally I am kind of anxious. Like, talk to anyone that knows me, they'll know, right? So as far as trading goes, when you're naturally anxious, you really need to have a plan. And I guess that's why you feel like that I'm pretty calm and have serenity when it comes to trading. Well, because in a way I am, because I have such a structured plan. So, but that's it's kind of funny for me to hear that. But I'm glad that comes across. But it's one of those things I just had to do to overcome my anxiety in trading, is to have a definite plan, which I guess takes a lot of the edge off. That's great. That's funny to me to read that, but thank you, Grant. Dr. Long says, hey, Greg and all, some player is buying bonds hard today. Oh, really? All right. Well, we will look at that when we go through the charts. Good to see you, Dr. Long. Alan, hey, buddy. Good to see you, sir. Nice to have you. Glenn, hey, Glenn. Good to see you. Walmart looking good today. Would need to see it close above 116 on a daily for close for 3 days. Lots of resistance though at 118. Yep, that's one of the positions we have today. We're going to be looking at that. Thanks for coming, Glenn. Dr. Long says USL is finding some buying also. Oh, okay, we will look at that. Actually, let me see. I was thinking about buying UAL yesterday, but I didn't buy it because it closed under the 200-day. Not a ton of volume yet, but we don't know. Interesting. Did reject the 100-day as well. Now that we're into the, look, yeah, you could buy it here. Just use the 200 days as your stop for sure. I think personally, I'm going to wait for this to move up a little bit more if we can, and then come down, see if we can get a day or two down and get a higher low V1. Marco, hey buddy, good to see you. Nice to have you here. Hope you're having a good evening. Grant says, wow, is that surprising, Grant? Marco, great Etsy and beyond for me also. Oh, I'm so glad to hear, Marco. I never hear about Marco's trades. Fantastic. Good job. Right there with Steve with Etsy and beyond. Toby, hey Toby, good to see you. Thank you for coming. John says, double top analysis on SOXL, please. Well, John, I do see a few bearish things here. Here we have this previous top with strong MACD that showed strong momentum. We did come back into the value zone. We did paint some red MACD bars. Dr. Alexander Elder calls this breaking the back of the bull. When you are strong, then you go down against the bull. Now you've moved up again. See how we're higher than over here, but see how we have no green bars, no positive momentum green bars. This is what Dr. Alexander Elder calls a double top with a bearish divergence. There's an RSI divergence. Look how high we were over here, almost to the third, fourth, almost to the sixth channel. Now, actually intraday, we were higher only to the second ATR channel. This is called a double top. I'm sorry, this is a ATR divergence. And in addition to that, look at the RSI. See over here at the highs, we had the RSI, how high the RSI is. See how high we are now? We're just as high, but the RSI is down here. And we had this previous high. We broke out. Now we're back into the range. So yes, to me, this definitely shows a double top with some bearish momentum, bearish MACD divergence, ATR divergence, RSI divergence, and a false breakout to the upside. So yes, that to me looks quite bearish. Hey Frank, what's going on? Grant says, that's so funny. Thank you so much for your response. You're welcome. Frank says, hey Greg and group, a poem. We got another poem, everybody. This is great. Let me copy this real quick. Put this over here. All right, so there's Frank's poem, so I can post that later. It's been a big hit. These poems have been a big hit. Frank says, a poem. Loss is a four-letter word. They can add up so fast it's absurd. To ease their pain, it takes even more gain. Yes, losses are something every trader disdains. Oh, that's great, Frank. Thank you so much for sharing that and writing that. I'm telling you, you have a talent for that. I mean, just to be able to write a poem every single day, and a relevant poem. I mean, not something that rhymes, but really something that's true in trading. Thank you so much, Frank, and if it's okay with you, I'm going to share that later on Twitter and Facebook. Dr. Long says, UAL is trading the opposite of oil. Well, that makes sense. Lower oil prices, good for airlines. Steve says, Frank, you are a trading poet. I tell you what. I'm telling you, Frank, you need a book. Frank, the trading poet. Frank says, thank you, Steve. They call me the poet of Wall Street. Oh, I like that too. John says, SOXX would be the bearish play on XOL lower. SOXS. Is this the inverse one? Is XOXS the inverse to XOXL? Steve says, I've treated every Frank poem. I know, it's me. I have as well. Frank says, Frank makes everyone here smile. Totally does. All right, well, listen, maybe we should get to it, huh? I only have a couple positions, but let's get to it. So, the S&P 500, the world famous overnight SPY trade. So in case we have some new viewers today, I do want to go over this quickly. I do buy the SPY, SPY, every day at the close of the market, and I sell it first thing the next morning. I've done this since February 26th of last year. It's been quite profitable. You might ask, why would you buy that? It has nothing to do with technicals or anything, and that is true, but this has to do with the long-term tested study from Liz Ann Saunders. Since 1993, 2 options in this back study. Option number 1, buy SPY at the open each day, sell it at the close each day. If you would have done this each day, buy the open, sell the close, buy the open, sell the close, every day for all your troubles, you would return a negative 13.9% return. However, if you did the opposite and bought the SPY at the close like I do and sell it the very next morning, if you did this every day since 1993, you'd have returned 634.2% return. So you can see there's a clear difference in the time you buy it and the time you sell it. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. Clear difference. The buy in the afternoon, sell in the morning definitely has superior results. Past performance is no guarantee of future results. Of course, that's true for any trading approach, but if I'm going to allocate capital to a backtest, I'm going to allocate it to something that has a good long-term track record. It shows that if you can, so far since 1993, using this approach, there's ups and downs, right? Nothing goes straight up, but over the long run, this has worked out very, very well. So that is the reason I buy the SPY each day, sell it first thing the next morning. I did buy it here yesterday, 324.45, and sold it this morning at 326.18. So finally had a nice overnight SPY trade. Since the beginning of the year, it's been a little rough. The day before the first of the year had a nice, great gap up, but then the next day, bam, had a big down, big down, big down. Slight up yesterday and a nice up today. So grateful for that, and this is just something I do every day. So good trade, and I will be buying this again at the close of the market, selling it first thing tomorrow morning. Okay, other trade that I have, the only other trade that I have is I did buy Walmart here yesterday at 116.06. The reason I bought it, twofold. One, it's a very scary place to buy. I totally understand that. But the reason that I bought it is we had 2 rejections of levels below. The first rejection was it bounced off of the negative third ATR channel. 90% of prices tend to bounce here. So when it gets down there, it's something to consider. In addition to that, we went under 30 intraday and closed back over. So the market tested this level at the third ATR channel, didn't like it. It also tested the prices below the 30 RSI, didn't like it, went back up. So does that mean just because that happens, automatically it's going to go up? Well, of course not. But it does give you, at least some information that the market just in the last little bit tried to go down here and it didn't like it. Well, that's why I took the trade. I had 2 confirmations that the market didn't want to go down, and if I was wrong, I'd be wrong very small with the close under the 30 RSI. And yesterday it closed at 31.25. So if it closed 1.25 RSIs below that, then I get out for a small loss. If I'm right, well, I have an outsized potential gain to the upside, and that's what you have to do with trading. Identify support, real support, moving average or something else like RSI or ATR channels. Identify that it's rejected, put on your trade, giving yourself a good risk to reward ratio. If you're wrong, you're wrong small. If you're right, we don't know it's going to go up, but if you are right, you have the potential for a big up move, a multiple, right? Remember we were talking about risk to reward. So, I might have a 3 or 4 times risk to reward on this. So anyway, I have hit 2 profit targets today. Very happy for that. My intermediate term profit target here is at 118.73. This is the 50 RSI for today. So if it rejects the 50, closes back below, I'll get out. If it continues to move up, I'll just continue to phase out until we get to the 50 RSI. If it can close above the 50 RSI, then I'll continue to keep phasing out up here to my ultimate profit target, 120.41. Now, if we can move more than 1 ATR away from my entry, then I will also implement a trailing stop like a close below the previous day's low. So So anyway, very happy with Walmart here. Let's see, has it moved one ATR? So one ATR is 1.24, and not quite. But this may change tomorrow. So far as it is right now, just holding steady. But this has been it's been a nice trade, up 0.88% and 2 profit targets. So that is it on my end, the SPY trade and the Walmart trade. Let's take a look at some of your guys' trades. So Amon Solo did buy CF Holding yesterday. I did like this trade, under the 200, over the 200, nice V1. It was down much more earlier, but I'm not sure how Man Solo is going to manage this trade, whether he's using just a close below the 200 or a close below halfway of the washout bar. Not sure. If it's halfway of the washout bar and it closes here, I would imagine he'd keep it. But if it closes, if he decided to get out with the close under the 200, he'd probably get out here. But it's the same thing. If he's wrong, you know, most likely, not all the time, but most likely being wrong small. And if he's right, larger gains to the upside than the losses to the downside. So we'll have to see how that plays out. Let me know, Amon Solo, what you're doing with that one. Okay, here we go. So this is Jesse, I believe, right? Yeah. So Jesse took this trade yesterday, this V2. Here's day 1, day 2, day 3, day 2, washed out day 1, 3, closed above day 1's close. Not bad. I was concerned about this previous low over here. When we have false breakouts, I like it to go under and then right back up. This one really went under that previous range, rallied back to it, but that was my concern, that when you're so far below that previous range, when you get there, that might be the spot where it turns around, and that looks like it did happen here. So anyway, Jess, not exactly sure what your plan is with this, whether it's going to just be halfway of this washout bar is going to be your stop, or if you're using another stop, but let me know. Okay, Mount Doji. Mount Doji's had a monster trade back here on January 3rd. Bought this here at 45.48, and it has moved nicely, well off of its highs today, but it's still up 1.44%. So anyway, Mount Doji, if you're out there, let me know. I don't know if you've taken this off or you're continuing to hold it, but great trade, my friend. Man Solo did buy CMCSA, which is Comcast. He bought it way back here on the 19th, had a V1, rejected the 200-day, and just moved up nicely, nicely, nicely. A little sideways movement, then had some upward movement today. So fantastic trade there. Man Solo also bought FedEx back here on the 31st with this higher low V1. This has moved up very, very nicely from there. Congratulations. Alan bought Boeing back here on the 2nd of January over this 10-day moving average, moved up nicely, then came back down, up nicely today. So Alan, let me know what you're doing with that one, but really glad to see you're in the profit on that one. KMX, Alan also bought KMX back here on at 89.37 back on the 2nd. This one's been a little underwater, but it is holding the 30-day moving average, which is good. Bing He bought Cara, C-A-R-A, yesterday, this V1, and looks like rejection of the 30. This one has moved up nicely. Was much higher earlier, but still up 2.6%. And then I think Dr. Long bought a little VIX yesterday, and this one's down today. So I do like VIX actually in a way. We have this low, we have this rally, we have this lower low, we have MACD bars here, we have no MACD bars here. This is called a double bottom with a bullish divergence, but I will get long VIX, but if I need a trigger first. The setup's there, but I need a trigger. So, and then we have one more. Oh yeah, a Man Solo. A Man Solo bought IART yesterday. I did like this one. Here's the previous low. We came down, immediately went back up, right? We also had a V2 close back above the 200-day moving average, and it's up 1.19% today. So very nice. A lot of good trades there. A lot of good trades. All right. Steve says, take a look at the LK chart. Okay, let's do it. Oh my. Oh my. Look at this. It was above the 1 ATR channel, came back into the value zone, but darn it, for me, no signal here. But it's a good, it's worthwhile repeating that I don't like to buy up here. You're much better off at least buying at value or under value than over value. Look at this. Unbelievable. Very nice. Hey, Bing He. Good to see you. Thanks for coming. Can you help look at IRDM? IRDM. Yeah, that's pretty nice, Bing He. I mean, we were above the value zone. We came into the value zone and we made a lower high, but we did then wash out the previous low. This is a pretty sweet V2. Pretty sweet V2. I like that. And TSC. TSE. It's okay. I like the other one better. I mean, we did bounce. Looks like we did go under 30, over 30. But that was about it. Didn't touch the negative third ATR channel. I do like that first one better. Hey, man, Solo. So I hope Dr. Long says, I did not buy any more VIX. It is grinding down. Okay. Man, Solo, CF got emergency stopped out, so out of it. Oh, you did. Okay, well, good. I'm glad to hear that you had a plan for an emergency stop and you got out. That is commendable, Man Solo. Dr. Long says, I am thinking of buying early tomorrow if market is up. Okay. Clarence Beeks, Jesse says, add a Tesco. Okay, good. Good. So small loss. I don't really like what that chart's doing, to be honest with you. Okay. So listen, this is the time of the day where I do like to talk about trader psychology, maybe some good trading words of wisdom, something that's helpful to everyone. There's a lot of good Twitter and Facebook channels out there that spend a lot of time and a lot of effort, burn a lot of calories on putting out good trading quotes, good sayings, things that are there to help us, and I appreciate everybody doing this. And one of the best ones, of course, is our good friend Stephen Burns. This is a post not from Twitter, but from Facebook at the New Traders, Rich Traders group on Facebook. If you'd like to subscribe to that, I think it's really great. There's some things on there that you don't see on Steve's Twitter, but of course you would want to subscribe to both of them. But he may have posted this on Twitter anyway. But look at this. This is great from Steve. New traders, attention new traders, slow down, calm down, and manage risk. And look at this great saying. Every dead body on Mount Everest was once a very determined individual. So maybe calm down, right? It's true. Everyone that goes to climb Mount Everest is a very determined individual, and there's a lot of dead bodies up there, unfortunately. And how does this relate to trading? A lot of people are determined to become good traders. I think we all are, but there's that fine line between just pushing it, right? Feeling pain, pushing it, being very determined. It's a good trait to have, no doubt about it. But in trading, it's a weird situation where you really have to temper yourself. And like Steve says, slow down, calm down, manage risk. That's probably good advice if you're climbing Mount Everest. And it's great advice when it comes to trading the markets as well, right? Every dead body on Mount Everest was once a determined individual. So maybe calm down. And maybe calm down on trading. Be patient, wait for good setups, make sure they have good risk to rewards, and more importantly, overcome those demons that you have when you feel like I have to make a trade. I am determined. I'm going to make this work. Well, that's good, but let the trade come to you, right? It's a fine line of being determined and working hard, but also sitting on your hands is another big part of that. But I thought that was a great saying. Thank you so much, Steve, for sharing that. This is great. This is great. I almost died on Mount Kilimanjaro. I climbed Mount Kilimanjaro back in the 90s with Dr. Jorgensen, with Bruce, Dr. J here in the chat. And I got altitude sickness, pulmonary edema, cerebral edema. I was with 5 doctors. Not much they could do. I literally almost died. So when I read this, it kind of hit home. So, all right. Bing He says, CARA rejected 10 EMA and the price seems to retrace from the high. Do you think this is a sign to exit? Well, it's a real tough one. It's a tough one, Bing He. It depends on what your plan was on the entry. I mean, yes, it did reject the 10-day moving average. That's fine to get out. It did reject the -1 ATR channel. That is not exactly bullish at all, but it depends what your plan was. If your plan was, if it rejects before you got in the trade, if it rejects the 10-day, I might consider taking it out. Or alternatively, just let it go, wait till it gets more than 1 ATR away from your entry. And I think it did that today. Yeah, it got more than 1 ATR. Honestly, if I was in this trade, just me personally, I'm not telling you what to do, but if I was in this trade, I would probably hold it. Yes, it did reject the 10-day. It did reject the -1. It's a tough one. I can't tell you what to do. There's pluses and minuses. On the plus side, we still made a higher high and a higher low. Looks like we might be closing above the 5-day moving average. Hasn't done that for a while, so that's positive. Guys, I can't remember who said this in Market Wizards, but when faced with a situation where you're not sure what to do, the Market Wizard, I can't remember who it was, said, when I'm in a position where there's pros and cons, I'm not sure what to do, maybe take half the position off, Sometimes I don't think you can go wrong with taking half the position. If you take it off and it goes up, you're still glad you have half. If you take it off, it goes down, you're glad that you sold half, right? I think they're pretty good trading words of wisdom when you're really not sure. But let me know what you end up doing, Mount Doji. Steve says 40 viewers today at the peak. Oh, good. Good. Yeah, the channel's growing. Thank you for that, everybody. Christopher said, my dad climbed that. Oh, great. Yeah, it's pretty amazing. Pretty amazing up there. Yep. That was a good trip, other than a couple things like almost dying. So, all right. Well, listen, let's get to it. Boy, I ate up a lot of time already. Sorry. Okay. Well, let's go through, see if we have anything for today. Apple up again today. It's unbelievable. It's literally unbelievable. I don't know what to say about this. This is something that happens once a decade or once a couple of decades. It's an 82 RSI. Again, I need a pullback. I can't buy up here. I have to, at the very least, buy back in the value zone or lower. So obviously, I wish I would have bought this every single day. I say I can't buy it, and it's gone way up from there, but that's how it goes. Remember, though, the market swings up and down way more than it trends, right? So I'm a swing trader. I'm going to trade those swings up and downs. And in a market like this, it seems dumb to be a swing trader because all it does is go up, but it's not the norm. Remember that. The market goes up and down. It swings up and down much more than it swings. Than it trends. And in trend markets like this, someone like me is not going to do as well, right? That's just all there is to it. But out of 10 years, swing trades are probably going to outperform trend trades. So anyway, pull back into value is what I'm looking for. Adobe, pull back into value is what I'm looking for. Amazon, just too high up here. I'd like to see a pullback into value and a bounce back off that 200-day. So I just have to be patient there. Boeing, of course, we talked about that. I'm just looking for a higher low V1 or V2 entry on this, or perhaps some kind of moving average trade. So I'm glad that's up for you today, Alan. Berkshire Hathaway, need to pull back into value. Beyond Meat, you guys ready for this? Look at this, everybody. Steve took this back here when the 5 crossed over the 20. I decided to pass on it because it was it rejected the third ATR channel. I was yesterday when it was down. See, I drew this line here. I was looking to buy this if we could get back to 50% of the first big day's move and give me a little better entry, give me a little better risk to reward. But I shouldn't. I guess I should have just not waited for that 50% mark. Congrats, Steve. Look at this, a monster trade, up 10%. I don't think I've ever seen a 10% upper on one of Steve's trades in the last little bit. I'm not sure. Maybe I'm wrong, but great to see this happen for both Steve and for Marco. Good job, guys, and I hope that just keeps going on up there for you. Caterpillar. We were above the value zone, in the value zone. Now we're starting to hang out. This is what I want. Above value, into value, and then stop going down. It is stopped. So all the ingredients are there. I just need a V1 or a V2 for an entry. Dow Jones did tag the third ATR channel up there, acting as some resistance. I need to pull back into the value zone to get interested. Walt Disney not participating today, and also bullish and bearish engulfing bar to the downside. So you know, I'd be, if we could move sideways a little bit more, wash out this previous low, have a V1 or V2, or I would take a V1 or a V2 or some kind of price action here at the 50-day moving average as well. Etsy, well, look at this. So huge update today. I did take Etsy. Where did I buy Etsy? I can't remember now. I know I bought it a few days ago. Where the heck did I buy Etsy at? Now I can't remember. That's strange. But I did buy Etsy. It was a positive trade, but I got out yesterday. I didn't like this price action of this V1 reversal bar, loss of the previous range, and so I went ahead and just locked in profits here, which seems like it was a bad idea because it's up so much today. But that's okay. You know, sometimes I'll get out. It was a red flag. Rejection of this high, V1 to the downside, false breakout to the upside. But sometimes getting out with bad price action, you look like a genius. Sometimes you look like a fool. And in this case, I look like a fool, but it's okay. It was still a profitable trade, and I'm glad at least Steve and Marco have it. So congratulations, you two. That's great. Facebook. Just too high, above the third ATR channel, need to pull back into value. Gold, well, you know, everybody got excited way up here, right? Now it's, I'd still like to buy gold, but I need to pull back into the value zone. We had a nice trade on gold back here when we had the 520 EMA cross, and this worked out really nice. We went from here, and I ran out of shares up here. Missed all of this, but missed all of that. So I don't think gold's days are over. I just think we need to pull back into value. Google, of course, very strong. Can't get involved. Need to pull back into value. Goldman Sachs, super strong. Need to pull back into value before I can do anything with that. Home Depot, very strong up here, getting close to the third ATR channel. Can't buy anything there. IBB does have a 520 EMA crossover, which does backtest well. 162.8% compared to 355, but the drawdown is about half. But it is profitable with the 520 EMA crossover. I'm going to pass on this, and the reason why is, yes, we have a 520 EMA cross that happens right in the value zone. That's fine. That's where I would want it. But when I look at the weekly, we're right up here near the third ATR channel on the weekly. So that's what's going to make me pass on this trade. Intel, we were above the value zone, into the value zone. Now we've stopped going down and moving sideways. This is what I want. If I could get another day sideways, some kind of V1, V2, I would definitely buy that, but nothing today. IWM, Russell 2000, above the 1 ATR channel into the value zone. Nothing really right there right now. Johnson & Johnson did come into the value zone, only 1 day sideways, then had a nice V1. I didn't take it because I wanted 2 days of sideways movement. CarMax up a little bit today, so that's great. I know Alan and Steve have CarMax, so nice going there. Coca-Cola, I was waiting for it to come back into the value zone, waiting to buy that dip, but I never, which is great, but I never got a signal, so I can't buy that one. Lockheed Martin, really high up here, really high, need to pull back into value. MasterCard, ooh, look at this reversal bar and rejection of the third ATR channel. That looks a little toppy. Doesn't mean I'm going to go ahead and short it, but it does look a little toppy. McDonald's, JT did really well on McDonald's, bought back down here in consolidation and sold into strength. That's what you need to do. Good job. Merck's been weak. We were above the 1 ATR channel. Now we're below the negative 1 ATR channel. So here I'd need this to go up, have a couple days down, and then a higher low V1 or V2. Microsoft looks like it made a new high here, too high, need to pull back into value. Netflix actually down today, pull back into value. Although we did have a 2200 cross today, that's good. But again, I'd like to see this back into here, or at least to bounce off the 200. Nike down today. Yeah, it's been a little toppy up there. Philip Morris, dang, you know, I wanted to take this trade here because we were above the value zone, in the value zone, sideways movement in V1. Everything was perfect except it was too high when it's confirmed, and market didn't care. It just kept going up. So PayPal up today. Like to see pull back here into the value zone with the confluence of the 200. That would be good. Q's, looks like Q's made a new high today. Of course, I can't get involved here. I need to pull back into the value zone. Silver, yeah, going to be down. Look, we were way above the value zone. Drip back down into the value zone, then stabilize, have a V1, V2. I would buy it. We did have a nice trade on silver here with the 520 EMA cross. Whoop. 1, 2, 3, 4 days up straight in a row. I ran out of shares up here. SPY, of course, I'm going to be had the nice overnight SPY trade from 324.45 up to 326.18. So I'm happy for that. I know Steve's happy for that. We had a rocky start, so I'll be buying that again at the end of the day. Bonds, I think Dr. Long was talking about bonds, right? Some buying coming in on bonds. So we're above the 1 ATR channel, into the value zone. Now I just need this to move sideways and look for a V1 or a V2. Tesla down today, giving some relief to the shorts. I'd need to pull back into value for Tesla. Twitter up today, but lower than its open. So nothing I can do there. Man, this came right into the value zone, right what I was looking for, but didn't have any sideways motion, unfortunately. UNH, same, above the value zone, in the value zone, just didn't have a trigger and bounced right off of that. Oil, well, oil has really taken it on the chin the last 3 days, hasn't it? I'd like to see, I'd like to see it come down here to the 200-day and see if I could put myself in a good position for a good risk to reward with some real valid support underneath me. VIX just down here today. I would be looking for an under 30, over 30. Verizon was above the 1 ATR channel, came into the value zone, lost the value zone. Now we've even lost the 100-day moving average. So at this point, I would be looking for an under 30, over 30. How's our Walmart doing? Our Walmart's doing fine. Guess, again, we bought that with the under 30, over 30, and a rejection of the negative third ATR channel. It's important. It showed, that there were no more sellers down here before we made our buying decision, and we've hit 2 profit targets. So that's good. Energy Select. Okay, so we have a V1. Here's day 1. Here's day 2. Day 2 washes out day 1. Looks like it's going to close above day 1's close. Also rejected the 100-day moving average. Also rejected this previous range down here. Thing is, we have the 200-day above us. We're close to the 50 RSI. I probably would not take this trade. With the 200-day sitting right there, yesterday's bar was larger than 1 ATR. I don't like to take V1s or V2s up against a bar that's larger than 1 ATR. So this is a mixed bag. False breakout to the downside, V1 to the upside, negative, and rejection of the 100-day. Negatives are that the V1 was up against a bar that was larger than 1 ATR, and we've got the 200 and the 50 RSI right here. So I'm going to pass on that one. Financials, nothing really there. Real estate, well, we were above the 1 ATR channel. We've come back into the value zone. We made a lower high. We did wash out the previous low. And now it's moving sideways. So if I could get a V1 or V2 here, I would be interested. So I do like XLU, and this is utility sector. And the reason why is here we made a lower high. But then we came into the value zone, we washed out the previous low, we moved sideways, we moved sideways, we moved sideways. I was looking to buy this yesterday on this V2, but it did not confirm. So sometimes you see these green triangles, right? Well, this green triangle is giving me kind of a second chance at this missed entry here. And the reason this is positive is because if we go back 3 days, see the high here? See how we went yesterday, we went above that day's high and then closed under? Well, that's a V1 to the downside. That's bearish. But if you can have a bearish move, then immediately next day takes off bullish again, now that makes it bullish. So we have a high, we went higher, we closed below that high. If today we did not go above this bar here's high, it would not have painted this green bar. But because it did, that's why it painted the bar. So we had a negative V1 to the downside, which immediately got rejected and now is moving up. And I like where it's at. I like the sideways movement. If we look at the monthly's in an uptrend. The weekly is right in the value zone. This is Dr. Elder triple screen stuff. So I am going to buy XLU here at the end of the day. My stop will be a close below here. It did wash out, but yes, it would be right here. So I am going to be buying that at the end of the day. And then healthcare. I was waiting for the dip to the value zone. It came, but I did not get a signal. So the only thing that I see here today, as far as what I'm going to do, of course, I'm going to buy the SPY at the end of the day, and I am going to buy XLU. I'm going to continue with Walmart. That's doing really great. So only looks like XLU. So all right, Dr. Long says, scary that Iran is not done. Markets don't like uncertainty, but it is acting like it's over. Oh, that's kind of true. It's not over, Dr. Long says. Yeah, I think that would be the smart way to look at it. Amon Solo says EDV. EDV. So, I mean, there's a lot of good things going on here. We have a higher low V1, also dovetailed with the support of the 200. It's higher than this low here. MACD is positive. The only thing is that day one's bar, yesterday's bar, is a little larger than 1 ATR. But it is a nice washout. It is a V1. It did get very close to bouncing up an upward sloping 200-day moving average, and MACD is positive. Let's look at the weekly. Weekly is right here in the value zone. Monthly, now see, the monthly was up high and it's come down, so that's good. And it's been pretty orderly on lower volume. Weekly, V1 to the downside. It looks pretty, I mean, it looks good. I mean, it looks fine. I personally wouldn't take it because of yesterday's bar was so big. But other than that, a lot of good things. Higher low V1, back in the value zone, almost a rejection of the upward sloping 200-day moving average and positive MACD. So me personally, I wouldn't take it, but let me know what you're going to do, Monsolo. Dr. Long says, I'm bearish bonds, but didn't get off any because it didn't get high enough. Okay. Bing He said, sold Cara at 1533. Okay, so you're out of that. Nice trade, Bing He. And you are long now 24.94. There you go. You're up on the board, my friend. Hope that goes up for you. Make sure you have a plan involved with that, right? CARA had a rejection of the 10 EMA around 24. Thus, I sold Cara to play safe. Okay, fantastic. Makes sense. Ooh, our Walmart's getting up there, huh? All right, so like I said, I am buying XLU today. That looks like the only thing I'm buying except for the overnight SPY trade, of course. And then Walmart's just doing great. So I don't see anything else out there I can buy, unfortunately. All right. So I'm going to make, what do we have, 3 minutes? Okay. So Walmart's good, buying XLU at the close, buying S&P at the close. And that's it. But nice green day. Grant, is your 200 MA a simple or exponential? I noticed that mine are intersecting prices slightly different. Yeah, it's a simple moving average, Grant. But there, in most software, charting softwares, you have the ability to adjust for dividends or not adjust for dividends. Let's go to SPY. See, I'm adjusting for dividends, and my 200-day is 296.50. If I unadjust for dividends, I'm at 297.73. Is that what you have, Grant, on your 200? Is 297.73? If it is, then we're together, we have the same reading, but it's showing that your chart is not adjusting for dividends. So 293.73, not adjusting for dividends, but I like to keep my charts adjusted for dividends, which changes it from 297.73 down to 296.50. But it doesn't mean that mine's right and yours is wrong, Grant. You know, if you have the option to adjust for dividends, I personally would suggest it. But if you can't, that's fine. Just, you know, use your readings, what you have. Oh, you're using EMA. Okay. So, yeah, definitely EMA is going to be different. But it's also going to be different if you adjust for dividends or don't. Hey, that was the end of the market. All right, so okay, new SPY trade today at 26.65. And where's my XLU? And XLU 64.22. All right, so new SPY trade here at 326.65. Woo! And we'll sell that first thing tomorrow. Walmart, we had the two profit targets that worked out nicely, and then XLU at 64.22. Oh, I guess I'll leave that there. All right. There we go. So nice day today. Very happy with that. And if you have any other questions, or you'd like my comment on anything, or if you'd like me to break any other chart down, please let me know. Before I do that, I quickly want to put in my quick plug, my quick little daily plug, let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I love to teach. I've had great success with my clients. I do offer a course. It's one-on-one. It's in the evening time via Skype. Just be you and I. There's 5 sessions, and each session is between 2 and 3 hours. So it's between 10 and 15 hours, and it's one-on-one. It's very intensive. I teach you everything I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from all the mentors and coaches I've had over the years, in addition to everything I've developed myself over the years. So, if you'd like to, get a little bit more involved, maybe have a little bit deeper understanding of how I trade, what I use, the nuances, so forth, send me an email. The email's in the description of this video, or you can send me a message on Twitter. But if you are considering taking the one-on-one course with me, I do like to have kind of a interview. Both you can interview me. I'd like to interview you over Skype. It's totally free. I like to know more about you, your trading, what your challenges have been, what your goals are. And then of course you can ask me any questions that you have as well. And if we decide we're a good fit and we want to work together, then we can move forward. The course is $1,000, but I think, it sounds like a lot of money, and it is. But for what you get for that $1,000, all the experience and the things I've learned over the last 24 years, I think you're getting a really good deal. So if you're interested and you want to have that Skype call with me, please just send me an email in the description, which is in the description of this video, or you can reach out to me on Twitter. And then also, if you like today's broadcast, if you find it helpful, if the channel is helping you, please do me a favor, hit the thumbs up button. It's just a little thumbs up button down there at the end if you're happy and you like the content, right? If you don't, then you can hit the thumbs down button, right? But either way, let me know what you think, and the more interaction we get with the channel, the more YouTube feels like it's some kind of valuable content, and the more it will put it out there and promote it. And there's a lot of people out there that need help trading, and I honestly, sincerely feel like if they come here and watch us every day or every few days or something, that it will help their trading results. So anyway, there's my plug. Thank you as always for sticking through it with me. Appreciate that. Let's take a look. Grant says, close enough, but mine is EMA exponential. Okay, so it will be different a little. Grant says, correct. Thanks. Great. All right. So congratulations to Steve and congratulations to Marco on the Beyond Meat trade. Up 10.76% and up on Etsy 3.2. So fantastic, gentlemen. Very, very nice. Murray is here. What's going on, my friend? Good to see you. Hope you're having a good evening in Norway. Very nice. How are your trades been working out? We showed some of your trades the other day. I assume they were long. I'm not sure, but I assume they've been doing well, but thought I'd ask. Dr. Long says, Apple is too orderly to sell, grinding up. Yes. Dr. Long says, look for exhaustion. Yeah, I don't know what to say about Apple. I mean, if you're shorting this thing, you're in deep doo-doo. We did have a gap today here. You know, whenever I see large gaps to the upside, my first thinking is they're eventually going to get filled. See the gap here where we did get filled there, right? Now we've had this big gap. Very likely that we could come back and fill this gap, but there's a lot of people in Apple, and I think no matter how many sellers come into it, it's just being gobbled up. But can I buy it up here? No, I can't. I've been saying that for the last 3 months. Obviously, I wish I would have, right? But I have to follow my rules. When you follow your rules or don't follow your rules, either way, you're going to be disappointed and feel pain. If you don't follow your rules and you take a trade and it goes against you, you're going to feel the regret. If you do follow your rules and you don't take a trade and it keeps motoring up, then you can feel that regret true as well, right? So trading is full of regrets, whether you obey your system and follow your plan or whether you break your plan. So, but that's not really what trading is. I mean, yeah, you're going to miss a lot of them, but you are going to get some, and you don't need to get that many every year, to make a significant difference and profit in your account. Glenn says Walmart 117.36. Close above the 5 EMA. That's a good point, Glenn. Look how long it's been since we've closed above the 5-day. Not here, not here, not here, not here, not here, not here, not here. Now, would I buy it today just because it closed over the 5-day? No, but it is a good sign that something's changed. Would I buy it today based upon this V2? Yeah, probably. I probably would. Fortunately, we got it yesterday, and that's what I was talking about. These kind of trades are very scary, but they do offer a good risk to reward if you find a bounce. Did we know we were going to have a bounce? No, but we had a little inside information that it went under 30, over 30, also tagged the negative third and over the third, and so that is why I made the trade. But now we have a V2, right? MACD still bearish, of course, but you are very correct. You are very correct, Glenn, that closing over the 5-day, it's been under it for so long. That's a good sign. Murrah says, good to be here too. Just made it today. Finally, I managed to trade oil without being stopped out. Oh, upside or downside, Murrah? Dr. Jorgensen says, good hike. Nice day here in Vegas. Off to take a hike myself. Talk to you tonight. All right, buddy. Sounds good. Sounds good. Thanks for coming, Bruce. Be careful out there. Dr. Long, I would look for multiple gaps. Yeah, multiple gaps are always a good sign. As a matter of fact, in Market Wizards, I can't remember who said this, but one thing they look for are multiple gaps on the downside as far as being bullish, and multiple gaps to the upside as far as being bearish. So sounds like you probably read that, or maybe you learned that a different way. Gamer Squad, Dr. Long, can you explain multiple gaps? I'll let Dr. Long explain that if he'd like to. Mansola says, no trades for me today. Okay, I didn't think so, Amon. Murray says, upside. Okay, good. Well, it was down, but it was up off the low, so hopefully you got in it before when it was lower. Murray, no, both upside and downside. I was short in the morning and long in the afternoon. Well, perfect. Hey, Brian Schwartz, how you doing? Nice to see you. Thank you for coming. Amazon. Listen, it's not that I don't like Amazon, but I don't like it where it's here. So you know, basically, Brian, let me just show you this channel here. See this? This is the third ATR channel. See this one down here? Negative third ATR channel. 90% of prices fail at the third ATR channel. 90% of prices find support at the negative third ATR channel. You with me? Right? So anytime prices are up here near the third ATR channel, I want to be wary. I'm not thinking about buying. If I'm long, I'm thinking about selling. If the price gets down to the negative third ATR channel, I am thinking about buying. If I'm short, I would think about cover. So with that being said, if we look over here at Amazon, see how we're at the third ATR channel? I mean, yes, it's very strong. The market's very strong, but you know, based upon 90% of prices stall out or fail there, I can't buy up here. I want to buy back between this green line and this green line. This is the 1 ATR channel. This is the negative 1 ATR channel, meaning basically that the mean is right in between. I am looking for a pullback into the value zone. Anything above the 1 ATR channel, I consider overvalued. Anywhere in between this green line and this green line, I consider at value. Anything under the negative 1 ATR channel, I consider undervalued. So I want to buy minimum at value or undervalued. I do not want to buy overvalued. Now, with that being said, it does not mean that it's going to go down. It does not mean that it can't go up. I mean, most likely it will, but with the parameters and the filters I've set for myself, I need to make sure I have a good risk to reward ratio based upon support and resistance. And the way I view this here is that we are overextended and it does not give me a good risk to reward ratio. So right down here, a bounce off the 200 day at the same time it's within the 1 and the negative 1 ATR channel, that would be delightful right there. Okay, Dr. Long says, I bought calls on WMT. In WMT, sold stock. Okay. I bought WMT on Iran. I'm not sure I understand that, Dr. Long. As a defensive play on Iran, is that what you mean? Multiple gap means more than 3. Longs aren't willing to sell. Longs aren't willing to sell anymore. Shorts are paying any price. Recipe for blow off high. Yes, I agree with that. I remember, I don't know how long it was, a year ago, gold was, I think it gapped down 3 days or 4 days in a row. And, you know, as per the Market Wizard books, that is exactly what that Market Wizard was looking for. Just continuing gap down, gap down, gap downs. And that was the bottom. That was the very bottom. So, you know, works to the upside too. If you have multiple gaps, you know, gap, 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 gap to the upside, to me, it starts looking bearish. Because those gaps are eventually going to get filled, most likely. Murat says, when nobody tweets or nobody dies and nobody sends rockets, it seems like I can trade. These days, the window for trading without all these disturbances are pretty tight. Yeah, that's true. That's true. Especially with oil, right, Murat? Brian says, surprise Amazon's not moving much with the earnings coming 2 to 3 weeks from now. Yeah, Amazon is, in a way, has been, you know, I mean, well, clearly, look, if we look at the chart, if we look at the long-term chart, I mean, it's been up in the last month, but it is not, you know, it is not at all-time highs or anything like the rest of the market. So it has definitely been lagging the market. Dr. Long says, people fight a grind and give up when really... Is there more to that one? When market got smoked, I bought back Walmart on Iran, so I am long 117 calls for cheap. Oh, okay. $117 calls. Well, you're in the money then. Nice going. Nice going. Okay. Well, does anybody have any other questions I can answer? Appreciate to do it. I mean, I would be happy to do it. If you want me to look at any other stocks, if you have any other questions, please just let me know. So how did we end up here? So Mount Doji is still on his vacation. I don't know if he was watching this today, but he's had a really nice trade there. Looks like a man solo is doing great with Comcast back here on the 19th. Look at this beautiful trade. Very nice. It was a nice setup too. V1, bounce off the 200. FedEx, Mount Solo, again, higher low, V1. Look at this beauty. Okay, Alan, glad to see Alan in the money on Boeing. Glad to see Alan in the, oh, sorry. This one's underwater. He bought this at 89.37. So, but it is holding the 30 RSI, is holding the 200 day. Bing He got into a new position here, IRDM at 24.94. And we had a lower high. We're back in the value zone. We had a lower high, but then we washed out the previous low and we reverted back up and had a V2. So hopefully that's going to work out well for you, Bing He. And I kind of like here that the halfway, the washout bar right here dovetails nicely with the 50-day moving average. So I look at this as two areas of support. Half of this washout bar, it should hold from a 50% Fibonacci standpoint, and that lines up perfectly with the 50-day moving average. So I would look at two groups of buyers here. So, you know, if it comes back down in those two groups of buyers cannot hold it up, that's when I would get out. All right, so Dr. Long had VIX here yesterday. He bought a partial, but didn't buy any more today. I am definitely looking at VIX as well. If we can go under 30, over 30. We have a nice double bottom with the bullish divergence. Here's the low, deep red bars. We have a rally, nice green bars. Now we're lower than this previous low, and we don't have any red bars. This is a double bottom with the bullish divergence. Actually, this is called the missing right shoulder because you don't even have any red. So the setup's there. I'm just looking for a trigger like an under 30, over 30. And then Amon Solo also bought IART at 57.35. He's up over $1 already. So very nice. Frank says, nature abhors a vacuum and the markets abhor gaps. That's true. Nature does not like a vacuum, and markets do not like gaps. That's why gaps tend to get filled. That's why if you have gap on the way down, you're mostly going to go up to fill those gaps. If you have gaps to the upside, very likely you're going to fill those gaps. I think a good example of that is Amazon. Well, this gap already got filled. Here we have a big gap. This gap has not been filled. So maybe it was something else I was thinking of. Good point, Frank. You should work that into a poem because that is very true. Dr. Long says, fight a grind and give up when markets start gapping. That's true. You know, the end of those moves are not all the time, obviously, but a lot of the time, those end of the moves end with these, you know, climactic gaps or multiple gaps in a row. Dr. Long says, if we gap up in S&P, I'll buy full position. In VIX, okay. That didn't make sense there for a minute. Yeah, that makes sense. Well, I'll tell you what, I hope the S&P does gap up tomorrow for the overnight SPY trade and that you get in the right place on the VIX. Dr. Long, he's a good trader, I can tell. Okie doke. I noticed over on Christopher Uhl, 10-Minute Stock Trader, that he is going to have another interview with Steve coming up. So that's at 10-Minute Trading. Christopher Uhl, he's a friend of the show and friends. He's a friend of mine and friends with Steve. So he is going to be having a, let's see, next week we're hosting Stephen Burns. The topic, trading and staying sane. So anyway, look out for that. I'll be posting that when I see that as well. I definitely like anything having to do with Steve Burns, guys. You should listen. I read Steve's books so many different times and before I contacted him and had to talk him into being a mentor and coaching me. If you remember that, Steve. And so I'm glad I stuck with it and asked you multiple times. I'm very, very glad that I did that. So tenacity paid off, and it was great. Got a great coach, learned a bunch of different things, and got a good friend out of it as well. Oh, I have to make a note to myself. Okay. So, Christopher, I'm going to send Christopher the information for the Trend Spider. Oh, and Kurt. Let me write this down. So I'll have Kurt get a hold. So I'll send you his information, Kurt, email, right? So you can take a look at it. But yeah, it's pretty nice that he did this. I believe this is the code. And looks like that was the equity, I guess, or maybe this was the equity in the back test on using this. So it looks like it's worked out well. But then on the chart, here it shows. Again, I want to be very clear on this. Just because you have a V1 or a V2 entry doesn't mean you're putting yourself in a position where you have an edge. So, if you use this code and it goes, oh, V1, V2, V1, V2, that's good. You should be able to look at these yourself, to be honest with you, right? But if you want something to show you, that's fine, but it has to be in the right context. Day one's bar can't be larger than 1 ATR. Higher low V1s, V2s are better than others. You know what I mean? So please keep that in mind. But I will email his information to Kurt, and then Christopher, you would need to contact me. Give me your email address so I can, because I don't want to give the email address over the air. Bing He says, for gaps, I remember Greg mentioned if gaps are not filled within 3 days, it will go the opposite way. That is true. That is a good back-tested approach. Let me see if I can find a example of that. Yeah. I think what we were talking about being here is multiple gaps, not just one. We'll take a look here. So this is the back. I don't have the back-tested study. I remember I learned this a long time ago, but it had very good results. See the gap right here? Okay. So this gap from here to here. Here is the low of the gap at day. I'm not talking about being he of filling the gap. I'm talking about holding the low of the gap day, right? Here's the gap, here's the low. If after this day, it does not fill the gap within 3 days, this day, or this day, then there's a positive expectancy that it will continue up. And look at this. It's exactly what it did. But if it gapped up here, stayed above for 1 day, stayed above for 2 days, and then the third day goes lower than the gap up day, then that is usually going to be a false one and go back down. But this is a perfect example of here's a gap. We held the low for 1, 2, 3 days, and it kept going up. Very good memory, Bing He. Bing He, when Dr. Long and I were just talking about multiple gaps at extreme levels, see, that's different. Multiple gaps at very extreme levels, like Apple, right? I mean, obviously we're at an extreme level. We're up here at the 5th ATR channel. Multiple gaps at this compared to Nike. When we just looked at this Nike chart, now I can't remember where that was. Look here. See the gap down? See the gap down, everybody? Here's the high of the gap down day. If, here you have the gap down, here's the high of the gap out day. If within 3 days it takes this out this high, day one did it, this would be bullish. And look what happened. See what I'm saying? Kurt says, okay, thank you, sir. You are welcome, sir. Murat, GE has a big gap on October 30th. Let's take a look. Wow, look at this, guys. Here was a gap that within the next 3 days it got filled to the downside. That's bearish. That was right. Here's a gap. Did it hold 3 days? Yes, it did. That's bullish. So you're saying back on the October 30th. Oh, yeah. Perfect example. Here's the gap. Did it hold 3 days? It did. 1, 2, 3. It held. That's bullish. Multiple gaps at extreme levels, like Apple. We obviously are extreme levels. Anytime you're at the near the 6 ATR channel after a huge move like this, yes, that is called an extreme level. Then multiple gaps at an extreme level, or exhaustive gaps. Yes. Gamer says, great teachings on gaps today. Oh, thank you, David. Appreciate it. Yeah, gaps are a big thing. I mean, you know, if we look at S&P right now, we had this gap got filled. We had this gap got filled. We had this gap got filled. Now we may have some gaps to the upside that may get filled to the downside. Dr. Long says, it happens more in commodities than stocks. Yes, I agree. I agree, but I think it's the same principle in stocks as well. Murat says, GE is interesting because of the gap. It looks like it crossed also many averages. Yeah, I mean, look. I mean, on that day, I'm not sure. Most likely this was earnings, but yeah, I mean, it went up above the 250, the 100, the 200, the third ATR channel, all in one big swoop. If you gap over bunches of different moving averages, that means there were not any sellers that were even willing to sell in here, even with all this resistance. So that's very bullish. But of course, you know, the way that I look at this right here, I couldn't buy it here right now, right? I just feel like you're late to the party. It's like if you go to the bar, you know, you go to the bar, you have a couple beers, you get out of there at 10:30 while everything's still cranking, compared to closing down the bar when no one's there. I feel like, you know, on some of these moves, get out while the party's going. Don't wait to the very end. Murat says, maybe gapping over the 200 average might be bullish. I agree. anytime you gap over major moving averages, it is bullish in my opinion. All right, let's see what's happening after hours. Okay, SPY's down a little bit. Walmart's up a little bit. XLU is even. Yeah, it'd be interesting to see how this XLU trade works out. But, the reason I took it is because, we had this lower high, washed out the previous low in the value zone. Then we have this nice sideways movement. I mean, this is obviously nice sideways movement showing that buyers couldn't overcome sellers, but sellers couldn't overcome buyers. So, moving sideways. It's always better to have sideways movement because sideways movement leads to big moves up, right? I would much rather buy sideways movement than buy big, strong moves to the upside. Again, being a little late to the party. I was looking for this V1 yesterday, but it untriggered. Day 1, day 2, day 3, day 2, washed out day 1. This day, I would have bought it yesterday if it would have closed here. So I still like the formation, but I didn't get the signal. But this right here, the orange triangle gave me the signal in that 2 days ago we had a high. Yesterday we went higher, closed lower. This is bearish. But if you have a bearish bar, a bearish signal that the next day overcomes and goes back up over that bearish, that's bullish to me. So I did enter here at 64.22. Dr. Long says S&P could gap. It'll be a big opportunity. Yeah, there are definitely opportunities in gaps, especially at, at these extreme levels. So all right, everybody. Well, listen, thank you so much for coming by. I appreciate it. It looks like my time's up. 2 things to remember. 1, please go out and do something nice for somebody today. Just a little smile or a wave or a hold the door open or, share your Red Hots, something, right? Share a package of chewing gum. But there's people out there that have really bad days that even just one little act of kindness or one little gesture, right, might just turn their whole day around. And I mean it. It really might be the difference in them having a horrible day and doing something horrible or going, that one person was nice to me. So please, let's try to get in the habit. Just do that every day. And number 2, if on your way out, if you could remember to hit the thumbs up button if you enjoyed today's program, I would really appreciate that. So I appreciate everybody coming today. I really do. It's great to have you here. I always look forward to it. I look forward to your comments and your questions and Frank's poem. And I think we have a great group. It's been really nice and I appreciate it. All right, well, I'm going to get out of here, put my hiking boots on, go tromping around in the snow, maybe hit the gym later. We'll see how that goes, how I feel. So have a great rest of your day. Do something nice for somebody. Hit the thumbs up button if you can remember before we get out of here. And hopefully I will see you tomorrow. We have last trading day of the week tomorrow. So thanks, everybody. Take care, all right? And we'll talk to you later. Bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.